I blew up my options account in this.
Welcome to Stash. You can
All right, everyone. Good morning from Detroit, Michigan. Hope we get started here in 8 or 9 minutes with Anne-Marie Band. We have some solid option strategies for you today. These strategies have been a game changer for me personally. Go ahead and throw in the chat where you are tuning in from. What's your experience level with options? Have you just traded calls or puts? How long have you been trading? That'll just give us a better idea of how to guide today's session. So yeah, Anne-Marie is an absolute professional. This should be a great session. Get out your pen and paper or whatever you use to take notes and let me know when you're ready. All right, we'll talk soon. Awesome. Looks like we have some international friends here, speaking from the United States perspective. Welcome Neil from Bahrain, Josiah from Scotland, Zach from Canada. That's awesome. It looks like we have varying experience levels here, whether you're a beginner, 2 years, 10 years. Anne-Marie can definitely speak to all of those situations. And we can definitely speak as far as how to not get destroyed, Zach. I think we've all been there with some of those tough trades. So, this should be perfect. I don't know what's up with the soundtrack, though. Need something to wake up. Hey there, good morning, Bill. Glad to have you here. And Zach, I think Anne-Marie actually posted some short put spreads this morning. We'll have to talk about that and how that's interacting with the new low a day for the SPY. All right, looks like Anne-Marie is in the house, everybody. We'll get started here in just a couple minutes, and this should be an awesome session. So make sure, let us know that you're ready. Whether you're in the Zoom chat or the YouTube chat, go ahead, type ready into the chat to let us know that you are ready to rip, because we have a lot to learn today from Anne-Marie. Awesome. I see you, Brent. Red eye. Maybe I needed a red eye this morning. Give me some of that espresso in my coffee. Josiah, Tigran, Liber, Chris, let's do it. Shahab, awesome. All right. Well, since we're all here, let's go ahead and get this started. I'm just turning off this soundtrack. Get rid of that. And so first of all, I just wanted to give Anne-Marie a little intro. She joined our team within the past couple weeks, although we've worked together in the past. And so I am just so excited to work with her, to bring all of you who are watching some quality education. And today this session is titled Moneyball: Trade Confidently with a Safety Net. And I don't know about you, but I've definitely blown up some trades, blown up some accounts, and there's a lot of, I don't know, advice out there that's not very good. But Anne-Marie has been in this game for a while. She knows how to manage risk, and not give up the profit side, right? We're all here to make money. We all want to make profit, but you can do that in a wise way that's consistent, reliable, and I think that's something that we're all interested in. So without further ado, Anne-Marie, welcome. How are you? Are you having audio trouble, Anne-Marie? Looks like she might be. This is our first webinar together, so we might be working out some kinks here. I'll stop the share. You can't hear me? All right, we're fixing that. All right, so while Anne-Marie fixes, I guess I can't hear her. I'll go ahead and share my screen again, and I'll just keep talking to basically show all of you some things that were posted this morning. Let's see, I'm sharing my screen and then dragging down the Benzinga Pro here. So you should be able to see that pretty soon. And so just while Emery's figuring that out, we were talking in the chat before this started about how the SPY was reaching a new low of day, and some of the things that we'll cover today have to do with the spreads. So maybe not all of you know how to trade a spread or a butterfly or even an option, but we'll definitely cover some of that today. And so right here, we're talking about a contract roll, SPY short put spread. And this is from Anne-Marie in our chat on Benzinga Pro. And so we'll talk more about the specifics of this, but basically selling some 416 puts, buying the 412 puts, and then others for, another setup here. And you can see here that even as we speak, these 5-minute candles around 402 right now. So we'll see how that develops throughout even today's session. And Anne-Marie told me she was in a trade right before this. So let's see here. I'm making sure. Zach is seeing, is the strategy debit spread for a day trade? Yeah, I mean, you can do debit spreads, credit spreads, depending on the situation. There's all sorts of fancy words, but yeah, buying and selling different contracts, butterflies, iron condors. So these could be used for day trades or swing trades. Awesome. Okay, Anne-Marie is resetting the Zoom. She lost all of her audio. So I'm killing a little bit of time here. But Mary's saying holding puts as well since last week on SPY. Boy, they're printing. Awesome, Mary. That's good to hear. I'll switch this over to the day chart on Benzinga Pro. And for any of you that don't already have access to Benzinga Pro, go start a free trial. It's at pro.benzinga.com. I'm sure many of you are already familiar. Hey, are you back, Anne Marie? I hear you.
I think so. Can you hear me?
Yeah, it's kind of soft, but maybe that's my audio.
All right, now it might be me. Let's turn this bass up.
Yeah, it sounds like you're using a speakerphone or something. Yeah, Bill in the chat says the volume is low. But
Monday shenanigans.
yeah, happy Monday, right? But just while I was stalling for time, I was just pointing out we were talking about the SPY reaching new lows and how you actually put in a trade alert for some SPY puts or spreads this morning in Benzinga Pro.
We did. All right, let's try these. Hang on.
All right. And so anyways, while we're getting that set up, yeah, definitely follow along at pro.benzinga.com. I'll throw that into the chat here, pro.benzinga.com. Free trial, no credit card required. I'm throwing that into both of these live chats.
Okay, can you hear me?
Yep, I can still hear you. It's still soft.
Oh, right. It's weird. I don't understand. Let me see if there's a mic control. Chat. Okay, how about now?
That's worse. Sorry.
Okay. All right. Well, unfortunately, that's what we got. I'm going to let me check in my supply closet as you chatter.
Okay.
Thanks for holding it. I'll see if I can grab one of my other headsets floating around. Hang on.
Okay, no worries. So in the meantime, I'll just poke around on Benzinga Pro a little bit here. As you can see, we've got a brand new chat room with Anne Marie. So a lot of these strategies that we're going to be talking about today are available right here. It's included in the essential plan. So some of you might be aware of the trading schools or other inner circle chat rooms that we do at Benzinga with other traders, other analysts, but you don't have to pay extra for this. This is included with the essential plan on Benzinga Pro. So basically you would get your real-time news on our news feed with a whole bunch of advanced filters. You would get charting on the details tool. So you could take a deeper look with our charts powered by TradingView. I could go to a 1-minute chart, whole bunch of indicators, all that good stuff. And we have a real-time scanner where you can look at percent change in the past 60 seconds. It's real-time data. And we can add price and volume filters. I'll show you more of that stuff later. But basically, if I just want to see stocks that are up in the past 60 seconds, I can do that. And then I can also sort by those companies as well. So yeah, it's a great combo here where even this morning, I was talking with some Benzinga Pro users about a simple way to find stocks that are gapping in the morning. And I could just open up my What's Moving scanner, check out the gainers in the pre-market for the whole session or for the regular session for that matter, and then take a look at why some of these are moving along with the news feed. And like this one, I think this is obviously a penny stock, but it had a legitimate news catalyst where the FDA lifted the clinical hold on one of their products and boom, it's up 80% in the pre-market. It looks like it came back in a little bit, but that was definitely a potential trade if you do trade penny stocks. Not all of us do, but that's a nice little example there. How are we doing, Anne Marie?
Can you hear me?
That is louder. So I think that'll work for today.
Okay. All right. This is one of my old Plantronics, so it ought to do pretty well. But we'll see. We'll figure it out. I apologize, folks. Wow. Oh, the chart's really rolling over. Okay. Yeah. So let's jump. Let's jump to it. Thanks everybody for coming. I'm really good. I didn't pull an AMC since I had to get up and leave the room. Wouldn't want to be wearing pajama shorts. So good for that. I don't know, for those of you that saw that AMC video with the CEO doing the numbers in his pajama bottoms, but we're not going to have that today, so we're lucky. Thank you so much for hosting this, Jonathan. Welcome, everybody. It's really an exciting time in the market. It's also a little bit nerve-wracking in terms of time in the market. And so, we're going to take a page out of the Moneyball book that talks about, how to hedge. How are you going to end up getting more runs at the end of the day? And for those of you who know me, I'm a huge baseball fan. Really happy for Buck Showalter at the Mets. Not a fan of the Mets, but happy for Buck Showalter since he was with the Orioles for so long. So, moving on. Jonathan, what would you like for us to position ourselves with first? Do you want to just have me give a overview of what it is that we might be after in the long run, or what are you thinking? How would you like to?
Yeah, maybe just a 30,000-foot view in like 60 seconds of like the way that you trade personally and how that translates to the option strategies that we'll be discussing today. And then we have that slideshow that either I can bring up, or if you have it on your machine, you could bring it up, whatever works for you.
I have it, but I would love it if you would do it, and then I'll just walk through the spaces. That way you can manage the rhythm and flow of that.
Perfect.
Yeah, that's going to be better than me doing it, for sure. So I have been trading for almost 20 years, and I was a really bad trader in the very beginning of my trading career. So what I have is a lot of mistakes that I learned from. And what I want to do is share with you a little bit about what makes sense to me in the market. And what makes sense is following the flow of money and price. Now, a lot of option traders get very complicated in terms of how they position price. And I do that on occasion, but I am not so inclined to share it because it does get a little bit noisy in terms of what you have to learn. So the big thing is to remember that options were created to hedge in the market, to protect against downside. That was the original building of a contract. And of course, it started in the futures market because a farmer would say, hey, I don't know what the weather's going to be like down in August, but if I can secure my prices today in June or today in May, I'm going to be much better off to plan for the next harvest. And so that protection event came about in that space. And so, of course, once you build something, you just start adding on to it, and it becomes more complex, kind of like the internet today, right? There's so many things that are just building on top of each other, and we see that a lot in strategies. So what I do very simply is I will look at a chart, and I will say, hey, I see this, this, and this happening, so I think we're going to do this. And so I'm going to take over the screens in 2 secs. I just want to make sure the charts are up and they're clean. And I am going to, let's get these things up. here. Maybe I should turn off some of this. All right. And we're going to look at SPY. I like to look at very liquid options. So the trades you're going to see are in very liquid spaces. What happens in very liquid spaces is there's always somebody on the other end of the trade to give you the ability to close or to open a trade very, very quickly. So let's share my screen here. Which one of these screens do I want to share? This one. Put me off to the edge. Let me know that you can see that. Can you? Yeah, great. Thank you so much. All right, so what we're going to look at are simple movement flows. Now, a lot of us get very excited about price action when really we should just be a little still in terms of saying, let's see what's going to happen. So we're going to do it really simply. If you see my blue candles are down candles, my white candles are up candles. And so when you see a series of down candles and you come into the new day and you gap down into your open and then you lose the low of your prior day / week, we know something's about to move, and so we know that's bearish action. So the trades that we have will show you bearish motion. Actually, what I was doing was rolling a contract for later on in the week. But today we have bearish motion. So on Friday, I gave us a trade for a butterfly that was about 25 cents. So it was $25 for the butterfly. And it says if we are under 408 and we hold near 405, we're about to close with full credit. Now, here's the beautiful thing about the types of trades that we use. We don't expect the chart to go all the way over and hold it into expiration. Well, of course, expiration is today. What we do expect is that 25-cent option moves to 50 cents or 75 cents. Right now, it's at 57 cents. So we bought it for 25. Today, it's at 57 cents. I would like to see it move to about 75 cents to $1, and then we'll cover it, unless I see something else happen and I say, here's what you want to do. So for the trading space, what we're going to look at is what does price look like it's going to do? And we're going to take a trade that gives us lots of room for profit and only small spaces for loss. So that's really why we call it Moneyball. We call it Moneyball because what we're doing is thinking about how many different ways can I win and how many different ways can I lose. And what I will position for us are ways to win more than ways to lose. So from a mathematical space, those of you who know anything about me, I'm a little bit of a math nerd. Actually, I'm a lot of a math nerd. I'm trying to make it sound a little better. But what that does is shift your expected outcome. So here's what traders normally do. They see something and somebody goes, hey, I'm bullish on X. So you buy a call. So let's say because volatility is continuing to rise, and I'll show you how I look at volatility. I look at it very simply as what is the VIX doing? And you can see, this is a weekly chart of the VIX on the left. You can see that the VIX is really not as high as it could be, as it was in 2020, but it really is moving into spaces where a lot of zany things can happen in the market. So when VIX begins to rise like this, a straight out put or a straight out call is going to become much more expensive. And so let's say you're looking at a long and you go, hey, I want to go long XYZ. Let's say you're a big Tesla fan and you think to yourself, ooh, this is going to be a bounce action in Tesla. You're going to buy the support. So if we look at this right here at this Tesla area, we're going to see that Tesla is about 800 right now. But if I look at the weekly, I can see it's down. If I look at the daily, I can see it's down. And if I look at the 4-hour, I can see it's down. And so everything is telling me, because I'm seeing a series of downward candles, downward candles, downward candles in that direction, it tells me, hey, time to set up a short trade. And if I lose, I want that loss to be very small. So, interestingly enough, I actually put a trade in over the weekend that shows a butterfly in Tesla for if it fails this 800 area. And if it fails the 800 area, it's probably going to go to the 750 area. And so that's where my thought is about how to position this trade. And so because it's this way and this way, I think, hey, it's going to continue short. Now let's see what that would cost. If I went to Tesla and I said, right now, I looked at something and I said, hey, listen, if I want to buy a call because it's going to move up, or I want to buy a put because it's going to move down, and I look out just a little bit, let's say I'm thinking it's going to go down. That's $2,600 for one contract. Okay? Let's say I think it's going to go up and I go, $50 out. That's not, it's moving $50 today, so not a big deal to give it until the 20th. But if I move $50 out, that's $2,700 that I'm looking at that I would have to expend. But take a look at the butterfly. The butterfly caps the amount of upside I will make on the position, no doubt about it. Most of us look to swing for the fences, but there are very few sluggers sitting out in that particular environment, right? There are very few good home run hitters out there. Most everybody works on base, right? How do I get on base? And in how many balls does it take me to get on base? All right? That's called base on balls and a slurry of other statistics that we would look at if we liked to trade, thinking about those kinds of baseball statistics. If we look at Tesla, though, and we go, hey, this one's going to roll off. I know it's going to go down. We can watch this move ahead of time, and we can see it at 55 cents, 50 cents, 58 cents, right? You sell it at market, it'll probably give you about 60 because the market makers will take the most that they can. But that's $60 that you are going to be paying instead of $2,600. So all of a sudden, the risk becomes much more compressed. Yes, if you're right, this could turn into $9,000, right? It could go deep in the money, and that 2,600 could become 9,000. But again, 9,000 is only what, 3 times that 2,600, maybe. If it goes through here, we could make 10 times what it is that we put at risk. So the goal is, how do we position ourselves that if we lose a little, and if we make money, we could make anywhere from a little to a lot. And so that's really what we are looking at from a price perspective. And so that's really the goal of Moneyball, of my trades that sit down in my chat box. And so that's the kind of work that we're looking at. So what I will tell you when the trade comes in is why you want to position yourself there. You want to buy a long put spread and a short put spread and jam them together. So here's what that looks like. We're going to do a risk profile, and we're only going to use one of these butterflies so it doesn't look crazy. Whoops, not scan, risk profile. Okay, so here's what it tells us. Here's the beautiful thing. For this risk profile, it tells us this area to the left is all we could lose, which is at this stage, it's $58, $50, somewhere around there. And we're also going to lose if it moves further out onto this edge. But between 755, excuse me, yes, 755 and 740, we're going to make our maximum amount of money. And it's going to be right in this place. So notice, I can lose all the way back here and all the way up here. And it's always a little bit. But if I look here, I can go, here's the win. It can be anywhere from $500 to $1,400. $1,450 actually would be that edge. So do we actually go up to $1,450? We'd be really, really lucky for that to happen. And since we don't bank on luck, but we just bank on what the market is most likely to give us, we'll be in good shape. Okay? And so that is what the trading is all about. This is really what the profile of any butterfly looks like. If we want to look at the call butterfly,
Oh, I think we lost you on your audio, Anne Marie.
oh, did you?
Oh, you're back.
No, I just stopped off because my butterfly is not showing up properly here. So the drawings are, call butterfly is not showing up. So, well, that's because it's way out of the range. We're thinking, potential massive expansion if that butterfly happens, if the traders simply run around and do what it is that they think is going to do. So notice the difference. This is the butterfly, but let's say we just want to buy the put. Notice, look at how much more we can lose. Yes, we have unlimited upside, but is unlimited upside something that we really need to reasonably go, oh no, this is happening? No. Unlimited upside is not something that we are going to expect from a particular trade. Now notice, as this trade, as the price action moves lower and lower, we can make tons of money. But what we've got at risk is huge. And so we can end up playing big names that are liquid enough for price action to move and put ourselves in the environment where we can make huge money consistently. Now, what do I mean by huge money? Listen, I'm a statistical trader. If I make 100 to 200% on a trade, that is huge money. I like to make between 35 and 65%. Sometimes the market will give me more. Sometimes the market will punch me in the face. It happens. But the goal here is for you to realize that when we are trading price action, we look at the price action across these multiple time frames and we go, are they all telling me the same thing? If that answer is yes, don't trade in the other direction unless you think we're going to have a hard stop and a huge reversal. Okay? So we'll be looking through things like that. So let me show you another type of trade that we are always looking at, and we'll look at Apple. And what we're looking at here with Apple is an iron condor. So an iron condor is another type of trade that has a call spread and a put spread. So I didn't really talk about that, and I guess I should. So let's do this. Let's go to Apple, and we're going to add a trade. We're going to add the trade that I have here, and it's on one of my other machines. So let me go over here on one of my other trading platforms. So I've got the 140, 135 put. So notice this is a short put. So I've sold it short. Then I'm going to buy the other side of it. Why? To hedge the risk. Now, here's something people say. Anne-Marie, if this goes wrong, I have 140 to 135, so that's $5 of total risk. But I only get 55 cents on a credit. Here's the thing. First of all, I wouldn't do that to us because that is a risk that I wouldn't do. But we've had this trade on since the fourth week of April. So we sold it for $2.60. $2.56, sorry. So now we have, so that is a put spread. Now I'm going to do a call spread. So I have 160 and 165. So now it's going for 164. We sold it for well over that, right? So now we're going to start taking a little bit of profit. And so what you'll see once we get things squared away, what we'll see is that as the profit starts to come in, we're going to take our gains. So let's have a peek. Let's look at a risk profile and see why we would do this. So here's what happens. If we took this trade today, we would have the most we would lose is the difference between $5, which is 160 minus 165, or 140 minus 135, right? Minus what we are collecting here. So that's $3.36, $3.35. Here it is right here. You can see that. So between this area at 134 and this area at 167, if we're in between those zones, we're going to be in pretty good shape. The most we can win is the 165. So if I sell it for over $2 and it starts bleeding value, now why would that happen? Because when we buy an option, we buy time to hold that option. So that's really what's happening, okay? So the more time that goes on, when the price does a little bit of nothing, the more money we make. So remember, if you buy an option, and let's say you just buy the put for Tesla. Let's say Tesla does nothing. Then every single day you lose a little bit of money because price does nothing. If I have the other side of that option where you've bought that put and I sold it to you, every day that you don't make money, I make money. And so this is why we sell our options in this particular environment. So why would I sell an iron condor in Apple? And it's because of the following. Do you see things coming down? Yes, absolutely. So we know it's on the bearish side. But I sold it when it was way up here. So a lot of people were thinking it would move out. And I suspected it would move down with the rest of the market. And notice my downward action is all the way down here. That's where I sold this option. And so the further I move away from my 160, the better off I'm going to be. Now, price action could stop at 150 and chop around all over the place. If you bought a call thinking, hey, it's going to go up, and it does nothing, you lose money. If you bought a put and it does nothing, you lose money. I've sold the call and I sold the put, and I also protected the edges, so I have limited risk, and I'm going to make money if it does nothing. I'm going to make money if it goes a little bit higher. I'm going to make money if it goes a pretty fair bit lower. So I've got 3 ways to make money, and the person who's bought the option only has 1 way to make money.
And that's why this is so important. Like, I just want to hop in, Anne-Marie, because there's some people here, honestly, probably half the people that are listening right now are a little bit confused and overwhelmed because they've never looked at a butterfly or an iron condor before. And we can handle all that. You and I are making more videos later this week to explain all of these concepts, and it takes time, it takes doing some homework, but it's not rocket science. We're here for you, and you don't have to have even a $25,000 account be above the day trading limit to do these. We're looking at $50 requirements sometimes, $200 requirements. So I just want to encourage everyone, if you feel overwhelmed, just hang in there. We're talking about basic concepts that you would have to know even with the more simple stuff: trends, candlestick charts, volatility. These are the basic fundamental things. And so Anne-Marie is just showing us, we're kind of taking a 30,000 foot view right now, where we're jumping straight in and we're saying, hey, here are some things that might sound a little bit complicated, but in the end, you get on base. In the end, you make money you're more likely to make money no matter what happens with a price action. And that's why it's so important in these volatile times to have probability and math on your side, so that you don't have to make some YOLO trade that and just hope and pray that it goes to the moon. So sorry to cut you off, Anne-Marie. I was getting some feedback on, there's always a lot of beginners in here. I'm saying just stick with it because we'll come back around to some of these basic concepts. But the main point is, if you structure your trades correctly, then you can have a very high probability of winning your trades and also be able to fix them if they go against you.
Exactly. And so here's the big takeaway. I want you to look at this in layers. First thing is, to trade well means you have to have a couple of pieces. You have to have the piece that says, I'm going to trade with the general direction of the market. And when I trade, I'm going to make sure that if I lose, that I won't lose a lot. The number one thing to look at for all the people who have amassed a tremendous amount of wealth, they've done it over time and in a consistent manner. We're not looking at the guy who played the lottery, okay? A lot of us come to the market and we go, oh my gosh, look at this. This person turned this account into this much in this many. And listen, last year was very easy. All you had to do was trade with the trend. For those of us that were old timers in the market, we had a much tougher time because the market was running outside of its normal cycles. So we were watching a lot of people just explode their accounts in great ways with no regard to risk, and then we watched them get their accounts decimated. And so moving forward, you have to realize two things. If it were as easy as I'm going to make this one big trade and then go buy my island in the South Pacific, I would not be here with you today. I'm just saying. Although I don't know if I would buy an island. It's just so, could you have to bring power to it and water? It's a mess. But anyways, because I have thought through that actually. So that being said, what we want to think about is how can we play and use Moneyball mechanics? And Moneyball mechanics say, give me the actions that will allow my positions to win over time more than they lose. And when I win way more than what I lose. That's really what we're after. And so, two things that you're going to see primarily. You're going to see spreads, and let's just look at what a spread looks like in pictures. All right? Let's take this iron condor off. Let's go back to Tesla. No, you know what? Let's go to SPY because this is live. And we want to talk about a few things. So here's SPY. This is going to be a flat line because we have no positions noted, right? I'm going to delete that. So here we have this, and we're going to say, wow, 11:11 already. We're going to say today, let's say that the market stays under 405. Okay? So I'm going to buy the 405. It's 466. Now, look. This says 401. That's the real price. This says 405. That's the strike. The difference between 405 and 105 is $4. Excuse me. 401 and 405 is $4, right? 405 minus 401 is $4. This is charging us $4.75. That expires today. So really the time premium, if price just stayed still here for the rest of the day, the time premium is really 75 cents. Time premium is the difference between the strike price and the actual price of the stock, along with epsilon and a couple of other things. Okay? Notice as this moves down, this will move down, right? As price moves down here, this will also move down because a put gets, a put gets more valuable as price goes down, but as time goes by, this number on the back side of this 4 also goes down. Don't worry about that. Don't fret about it. Let's just realize that if price closed today at 401 and some change, and this is 405, we get this 95 cents is going to be really what will disappear, and we'll get the actual distance between the two guys. Okay? So now let's say I don't want to lose. Let's say we go from 405 to, let's say this price ends up bouncing into 405, but we buy it at $5. If the price closes at 405, we lose all of this money. It's worthless to us. 405, worthless. We make no money because we can buy it at the market. Okay? Now, I don't want to expose myself to $500 of loss. Maybe I just want to expose myself to $200 of loss. So what that tells me is the following. If I buy the 405s and I sell the 402s, I can make $3. Okay? Now, the last way from the 405, I had to buy it at the 480, 470, $5. Okay, so I've got $5 at risk. Here, I only have $2 at risk. Now, I could buy this at the $5 and the price action could absolutely roll right over and it would end up being worth $12 or whatever. Or it could be worth nothing. All right? If I look at this and I go, all right, if I could make between the 405 and 402 while only exposing myself to $2 risk, I'm going to be in great shape because I will have an extra dollar, which is 30% return, right? It's actually 50% because you're getting an extra dollar and you only paid $2 for it, right? From those perspectives, you're making that percent return from the whole motion. And so you think to yourself, if I can make a 50% return versus 350% return, everybody goes for, hey, I'm going to go for the slugger event. But the fact of the matter is, that's an outside shot. Most sluggers do not have high batting averages. They just don't, because they swing out of their shoes at the plate. We know that, right? There are a few folks who are exceptional, but they are not the rule. And we have to trade like we are not exceptional. We have to trade like we're normal Joes instead of geniuses that know every direction the market's going to take. Okay? So a spread protects us from downside, and it allows us to get the trade another day if the trade goes poorly. All right? So anytime I will set up a trade, it will be a combination of a long put and a short put, or a long call and a short call, right? These are called verticals because they go up and down on this movement, right? This is called a vertical spread. So it bets in one direction or another. If I want to go $3 to the upside, I think it's going to recover. I could pay $1.20 for this, and it could go to 404, and I get it for, if it closes up over the end of the day, then, I've made almost $2 on that. You want to, yeah? Yeah.
There's thank you for that, Anne Marie. Now I know you have a hard stop at 11:30 Eastern time.
Yeah.
So and everyone, the good news is that Anne Marie will be in our chat room posting her trades, and we're also going to make some more videos this week. And this is a series, so we're going to come back to a lot of these concepts. So definitely stay tuned for that throughout the rest of the month. I think in the 12 minutes that we have available, Ashia had a great question in the chat. She said, I like the spreads you have placed in the Benzinga Pro chat. In reference to put spreads, how do you determine the best strike prices for put spreads? And that I thought would dovetail nicely into, we talked about all of these concepts. Maybe we could just look at one of the trades from the chat room on Benzinga Pro and just show people what it looks like to execute one of those trades on. It looks like you have Think or Swim up right now, correct?
Yes, I do.
Does that sound like a
now,
decent plan, just to kind of like tie this together?
Absolutely. Right now we have 408, 405, 402 butterflies, and we bought those for 25 cents on Thursday, and now they're rounded about 50 something cents. Now, you'll notice that the price is 401, which is under 402. So at this juncture, even though we're wrong with the strikes, we still can get out of this trade making 100% profit.
That's crazy.
Yeah. So how do you figure out the best price for, yeah, that butterfly is a nickel. That's great right now. If the dealers allow you to get that butterfly, you'll be in great shape. It is a no-brainer trade right there, because I do not think that the market makers have prepared for the fade that I see coming in Tesla. Anyway, moving on. How do I get the right price for the butterfly? Well, first of all, it is unusual for a butterfly a well-placed butterfly with a limited amount of downside risk shouldn't cost any more than 60 cents. That, of course, is completely arbitrary. That's me thinking to myself, all right, can I actually sell that for $1.20? So I'm always thinking about, hey, can I double that up if I'm buying it for these lower prices down here? If we have a lottery ticket like this Tesla butterfly could be, then that's something completely different. We would end up maybe wanting that to go for 50 cents, which would be a 10x, right? So we buy it for $5, we sell it for $500. And that in itself would be easily doable. So once you buy it, put your sell order out right away and let it sit in the queue. You want to use GTC, good till cancel. So how does that butterfly look? We have the 408, we have the 405. We've sold two of those in a butterfly. Think about how a butterfly looks. It's got a fat middle and two wings. So the wings are the things that we buy in a long butterfly, and the center is what we sell. So the goal is, in a put butterfly, for price to fall into this area, but we don't want it to fall down here. So here's what's going to happen to the price of this butterfly over time. If price continues to go down, this butterfly will start to lose value. It'll slip down into that 25 cents area. And so we're going to put a stop on that butterfly at about maybe 20 cents. So we're going to lose $5 per butterfly here. If this continues to move down, we're going to move our stop to 20 cents. So what we've done is put a bet on that could make us $300 per spread, and we're only going to lose $5. Okay? And so from that space, we're looking at, can we use that and say, all right, I'm in for 25, I'm out at 20, and so $5 exposure plus the cost of engaging in the trade, or I get my upside in that perspective. But that's what we're looking at, right? So if we go to the risk profile tab, and what I'll start doing is for every trade, I'm going to put a picture up of the risk profile, and what you want to look at is where's the loss and what is the gain. Now, don't look up here, please and thank you. Look down here in the pocket where the big fattest part of everything is, and that's going to tell you the real money you're going to be able to make. All right, so we've got 20 of these. So I'm going to change this to 20. And listen, please pay attention to what your loss is are going to look like if you take a very big trade. All right? So we have 20 of these, easy to do in the SPY because there are thousands and thousands of them. All right? So for us, the max loss is, well, not here. Our max loss is $500 because we have 20 of them, right? Not here at the 840 or so. So up here, really, this is where we're looking for, right? We're looking for somewhere around this area. So notice, look at what's happened today. We placed the put spread because I understand price action, and so I know where the spreads are going to head. And I think to myself, hey, this is what's going to happen. All right, we're going to go from 408. We should hang out at 405. And we definitely should not lose 402, but if we do, then we've lost our 25 cents, provided that we don't cover the trade earlier to get out. What this tells us today, after putting on that trade last week, is that we can be wrong with price, wrong with time, and we're still making money. This is the most important thing for you to realize that's kept me alive over the long haul. Okay? And so that's really it.
That is so important. You can be wrong about the time. You can be wrong about
the price. You can be wrong about everything and still make money if you're positioned in the right direction looking at volatility. And so the key skill that I bring to this game is understanding price action. Where will price go? What's it likely to do? Listen, was I sweating it 2 days ago, 3 days ago when I saw it go up to 167? Yes, I wasn't happy, but I was fairly clear on all the price motion that we were moving down. And so I knew that that iron condor would keep us in the space. So that's the journey that you're really riding with me. And what I'll try to do is put up pictures every time because I'm a picture girl also. I like to look at those pictures.
Awesome. And we'll also publish some explanations of the different types of trades.
Yes.
All right, here's a simple call or a naked call or put. Here's a vertical spread. Here's a butterfly. Here, so on and so forth. So you can expect more from us. But for right now, definitely, if you don't have access, go to pro.benzinga.com and you can actually check out Anne-Marie's trades on the free trial even. And so Anne-Marie, is it all right if I pull up the Benzinga Pro platform before you have to leave us in a couple minutes?
Of course.
I just want to show everyone where to find all of this stuff. Let's see it, and I'll just share my screen. Yes. Bada bing, bada boom. And so you're on Benzinga Pro, and you can see I have a bunch of different tools and tabs up. You want this chat tool in the upper left corner and click Open Chat. And then right here at the top, I have Anne-Marie Band Trades. Notice how there's different channels that you can select. So just make sure that you choose Anne-Marie Band Trades. And so this is where you can find the SPY trade, or if I scroll up here, we also have Tesla. And so this is basically just a channel where Anne-Marie posts her trades. And then of course, you can also talk with other traders. You can talk with our team on the Benzinga Pro Lounge or BZ Day Trading. So there's a lot of good opportunities in here. And we can go more into this on some of our other videos, probably about the buy to open, sell to open, all the different terminologies that you'll need to know to execute this. So, Anne-Marie, I just want to thank you for taking a valuable hour out of your day to be here with us. I'm sure we'll figure out all the tech stuff for next time, so we get the maximum application there. But this was the key takeaway here, right, is if you structure your trades correctly, you don't have to risk your account for a high probability of winning and a high probability of winning big compared to your risk, right? So that's what I got out of it. And so let's continue, to try to play Moneyball and put those odds in our favor. Anne-Marie, did you have anything else that you want to share before you head out? I think she did head out. All right, she had a hard cutoff. So thank you everyone again for joining us here today. And just to recap, we did cover some more advanced topics today. Some of your heads were spinning as you're like, wait a second, what are these lines on the chart? But what it really comes down to is you can evaluate these for yourself, even on Benzinga Pro. So if Anne-Marie posts something and she says, an opening trade alert, SPY 25-cent debit, that means you'd be spending $25 overall to complete this trade. And then use a paper trading account on Thinkorswim or on whatever brokerage you want to use. But if you just want to use the same brokerage that Anne-Marie was showing us today, you can open a free a Thinkorswim trading account with TD Ameritrade. I'm sure Benzinga has some landing pages for a lead generation team. Would love for you to open through our pages, but you can test it out. You don't even have to put your money on the line, and then just try executing these types of put butterflies or vertical spreads or whatever you want to straight from this chat room. And I did post some links in the various chats on Zoom and on YouTube here. So you can actually get 35% off of Benzinga Pro using that link. That's good through midnight tonight. So take advantage of that. It's 35% off of the annual, but compared to paying the full price monthly, it's over 50% off. It's like $912 for the year. That it's like $2.50 a day for access to these high probability trades, all of the Benzinga Pro news and scanners and everything for $2.50 a day. Neil, thanks for posting that recording link. That's also our YouTube link. So this will be available on YouTube after this session. And feel free to reach out to me directly or my team. You can access my team through this blue circle in the bottom right corner of Benzinga Pro, or you can contact me directly. I'll throw that again into the chat. It's jonathan@benzinga.com, or my phone number there as well. I'm just checking the chat here to answer any additional questions. Oh, that posted the sale link again. And then I actually meant to post my contact info. So yeah, that's what I'm here for, to answer any questions that you have, get you in on this awesome platform. And now we're very happy to include Anne-Marie's trading with all of that. Okay, that's also in Zoom. Let's see here. Roger, you got the recording. Fantastic. All right, everyone just saying thanks to Anne-Marie. Yeah, that was great, right? And if you're on YouTube, there's 93 of you in here and there's only 27 likes. Show us some love, give us some of those likes, and subscribe to the channel because we have live trading every day at 9 a.m. We also have the pre-market prep show at 8 a.m. And yeah, you should definitely subscribe. It's very high quality content in addition to these webinars. Let's see, going back to the chat here. All right. So in the next few minutes here, I've got another half an hour on here. And so what I want to show you is just everything else that's included here and what it'll look like when you check out. In fact, I'm following this link here. I'm just copying this link so we can look exactly what it looks like. So yeah, you click on the link, you go there to Benzinga Pro's checkout page, Code is Moneyball, good through midnight tonight. You can see that the normal price is $177 a month for the essential plan. Standard, a discount for annual brings it down to $117 a month. And then you get the additional discount on top of that to bring it down to $912 for the whole year. It's like, I don't know, 70 something a month if you divide that by 12. But yeah. And then of course, if you wanted to purchase that on the monthly basis, it'll work for that as well. It's just more expensive throughout the course of the entire year. So that'd be like $115 a month. Let me know if you have any questions on that. In terms of all of these other tools, so I do demo webinars a few times a week. We also have this great help site with tutorial videos. Again, this is where you would get the options video tutorials. That's actually with Nick Shaheen, but we'll post another section with Anne Marie as well. And then under strategy outlines, you have a simple gap and go strategy. A lot of this has to do with trading stocks as well as options. And then tutorial videos on how to use each of these tools within Benzinga Pro. So scanner, newsfeed, details, etc. And so, yeah, we're really focused on Anne Marie's trades today. Hopefully you got some idea of where that's going with the option spreads. But then a lot of people who just trade stocks use Benzinga Pro to find the movers in the morning as early as 4 a.m. And then I was showing you the scanner earlier. A nice little day trading setup would be, let's see if I have it loaded. Okay, an overnight swing scan. So here I was looking at stocks from $1 to $20, from 300 million to 2 billion market cap, with a volume of over 500,000 shares traded for the day, as well as an average volume of over 500,000 shares for the day, and a relative volume over 1. So now I've got a nice little list of stocks that meet my parameters. Looks like it's a bloodbath today, but still, I would very quickly be able to, cycle through those stocks, take a look at the charts on Benzinga Pro, and make my trading decisions much more quickly. Tina, I think the link is in the chat there for the recording. This is on YouTube as well. The YouTube channel, Ashia, it's Benzinga. If you just search up Benzinga on YouTube, in fact, I'll throw the link here into the chat. There you go. So you guys should be able to find all of this on Benzinga's YouTube channel. And I think right now, actually, we've got Benzinga Live, as well as this webinar. So yeah, all that you get on here with Benzinga Pro, of course, we have that brand new chat room with Anne Marie. The Options Inner Circle is a separate program. Well, I guess it's the highest tier subscription to Benzinga Pro with Nick Shaheen, who also trades options. But he has live trading 9 hours a day that you can do with him and follow his charts. And then he does a 2.5 hour charting session every weekend. You have access to that video, and then he publishes a Google Sheet with all of his charts, all of his notes, and specific trades that he might take. You know, he'll tell you, oh, I do a credit put spread, iron condor, etc., if he likes that situation. So that is the options mentorship plan on Benzinga Pro with Nick Shaheen. And then all of these other chat rooms like BZ Day Trading, BZ Options, Swimmers, these are all included with the Essential Plan. And then check out the Squawk. The Squawk will give you the fastest breaking news items throughout the day through your computer speakers So you can see here it's Squawk equity from 6 a.m. to 6 p.m. each trading day. And you just click on that
GM that
play
according
button.
to Reuters.
And that was Charlie speaking through my headset. But yeah, Charlie will give you those breaking news items as quickly as possible. And then Squawk options for key options flow from 11 a.m. to 1 p.m. with my colleague Zunaid. So definitely check out that Squawk. Awesome. Thanks, Ashia. Glad you subscribed and hit the like button. That's exactly what helps us out. And then some of you, maybe you were interested in options, but you also trade stocks, right? So a nice little setup for day trading would be if I close some of these, like let's get rid of a few of these. All right, let's do relative volume. Let's do this custom, say 1.2. So a 20% spike in volume in the past 5 minutes compared to what's normal. And then let's go here to price and volume filters, and let's check out up 1%, let's say 0.5% in the past 60 seconds. Okay, so it looks like a lot is down for the day, obviously. But then I could add this to my feed, and now I'm looking at a sorted list of a lot of these stocks are bouncing off of lows, but they're off of 2% up in the past 60 seconds. And then I could click on RCM and bring that up on the right side of my screen. So that's the scanner. And then you also have the signals tool, which will tell you when stocks are spiking up or down within a 1 minute period, at least 1%, as well as block trades, halts and resumes, highs and lows. So you really keep a pulse on the overall market or a specific watch list or a sector. And you could add filters here using the filters button and get notifications there. And so you have two high-powered scanners here, plus the news feed. And on the news feed, I'm going to click on sources and add in all my press releases. So now I have all of these headlines that could be causing the volatility, other than the whole market being down. And then we have the scanners, signals tool, Squawk is going, and I would just double click on the name of my workspace, and I'll just call this day trading. That's my day trading workspace. This is after I do my research. I do like to create a watch list of stocks in the morning based off of, movers in the pre-market. And you could also filter all of these by a watch list. Like I could go to the filters. So I opened up a new window there. Filters, reference, filter by a watch list. So now I'm only going to get scanner results on that watch list. None of that meets my parameters right now. Same thing for the signals. So it's very simple to filter by a watch list, price per share, all that good stuff. RM, thanks for being in here. Let's see, ask opening gap posted at 7 a.m. would be much more helpful than 9:30. Okay, yeah, you're RM, you're talking about the opening gap signal here. I agree with you. I don't use it at all. It's because we have the scanner, right? So like if I'm going to be looking at opening gaps, I don't want it at 9:30. I want it at 6 or 7 or 8 a.m. when I open my computer screen. So I'll talk to the team about that. Yeah, it's talking about the opening gap compared to the average true range there. Just what I use currently is, just to keep it simple, I'll use the movers tool. If I'm looking for opening gaps, I'll use the movers tool, in the pre-market session for the entire session. And so this right here, this will give you the biggest gainers and losers starting at 4 a.m. So you log in here, start clicking through those. They're right there sorted for you within 10 seconds. Or if you want to get more fancy, you open up the scanner tool. It's automatically sorted by change percent previous close, sort of giving you have to click it once to include the losers. So that'll do a similar thing. But then on here, you could also do change percent from the pre-market open if you just want to see what's moved since 4 a.m. Eastern time. And then you have all of these other variables that you can apply, which are not available on the Movers tool. But I'll talk to the product team about that. It seems like if we were going to do that with the signals tool, we'd have to have some sort of drop down where you could choose the time that you get the signal at. So yeah, I can see people arguing for different time frames. Offload trade ideas, opening gap scanner with pre-market chart. Okay, yeah, I appreciate that. And if you guys have any other tools that you use that really, if we just added this one variable or this one signal on Benzinga Pro, then you could reduce your cost, please let us know. Where we've built a lot of these tools based off of feedback from people like you. And so there's a send feedback button in the upper right corner of Benzinga Pro. Throw in your name, email, and we go over all of that feedback on a weekly basis. So I'll go to bat for you with our product team for sure. Also, feel free to email me. I'm going back to my YouTube stream here. And feel free to email me directly with any screenshots of what those filters look like on those other tools. So, whatever those other tools are, that way I can be crystal clear with my product team about what exactly would be helpful for you. All right, so we got the signals tool here. Thanks for that, RM. Glad you've been a subscriber for a while. Glad it's helping you out. Okay, so I showed you a day trading setup on Benzinga Pro. I showed you how you can find those gaps using our Movers tool. One other thing that you might not be aware of is our ideas tool. So Anne-Marie was actually sharing her ideas in our ideas tool before she even worked for us. So you can see in here, we have a lot of Benzinga staff members. You might recognize Mitch from the live trading. Christian is on our support team. So these are trades that we're actually making with our own money. Gianni is a swing trader that does some newsletters with us, as well as an inner circle product. And in addition to Anne-Marie, you're getting other trades here: ticker, entry point, stop loss, thesis. It's not a full write-up with a video, but these are a very good place to start to get some trading ideas. Let's see here. And then the calendar tool. So a lot of you said that you were beginners in here, and I love analyst ratings. There's actually 14 different calendars within this tool, but I can select from this drop down and click on analyst ratings. And this goes with the analyst rating strategy from our help site, where I could click on this and I could go back, let's see, or I could just say trailing 30 days. So this is going to give me all of the analyst ratings from the past 30 days. And then we have filters over here on the right-hand side. And I'm going to filter by the rating because I want positive ratings. So I'll get rid of all of the neutral or negative stuff. I'll keep outperform, positive. Okay, so everyone has a different way of saying good or bad. Get rid of sell, underperform, underweight. Okay, we're good to go there, I think. And so now I have all these positive ratings, and then under price target, I'm going to say less than $100 to get rid of some of the expensive stuff. And then I'm going to change my columns because I don't really need all of this. I'll just say I really want the price target. And then there we go. So now I have this list of companies from the past 30 days with all the positive ratings, and I can immediately see if there's a company that has like 3 or more positive ratings in the past 30 days. So ALV Autoliv, $71 today, down 1.5%. But we can see that it received, what dates was this on? On the 25th and 26th, it received a few ratings. And then if I take the average of these, the average price target is $92.25. And so the question is, would I be interested in making $21 per share on this within the next 12 months? And that's where, I don't know a lot about this company, but I could check it out. I could say, okay, what is the context of this? It looks like passive safety components for the auto industry, and it talks about some of its clients. And then I would always check out the day chart and any news items like, why did the analysts put in their 2 cents on the 25th and 26th of April? So I would check the 25th and 26th of April, and it looks like I'd have to dig into it a little bit more. Saying that, okay, this is not too far after their earnings the previous week. So it looks like they cut their guidance. But anyways, you can see I'm digging into this a little bit more. So it's not something where you would blindly follow the analysts. It's saying, okay, so it's saying I could make $20 over the next 12 months or less potentially. Do I agree with that thesis? Or maybe I'm going to be a contrarian and bet against the analysts. But either way, it's a place to start. And I love that analyst ratings calendar. All righty. I'm going to post that link one more time into the Zoom chat. Do you guys have any questions on setups for Benzinga Pro or how to follow Anne Marie in her trades? We will post more content in terms of how to structure those spreads and just where to start. We kind of dove in head first here with the butterflies today. Let's see here. All right. If you guys don't have any more questions, I think I will call it a day for today. But you've got my contact info there, so don't be strangers. Let me know if there's anything I can do to help, and stay tuned for more great content from Anne Marie and the whole Benzinga Pro family. And we look forward to talking soon. I'm just gonna go ahead and open up a new slide here, and because some of these people are watching later on, so I'll just throw this on here, make it so everybody can see, and throw in my contact info. There's and of course, it didn't copy my contact info. All right, thanks, William. Thank you, RM. You too. Have a great day. I hope you're having as great of a day. It is so beautiful here in Detroit right now. We had a great weekend. There we go. Make that bigger. Slideshow. Fantastic. All right, everyone. I'm signing off for right now, but have a great day and we'll be in touch soon. Take care.